recent SpaceX failed launch has affected Jeffrey's systems. So he's trying to work through some tech problems. But we are live on YouTube now. So if you guys have a friend, you think they'd be interested in maybe selling some puts, feel free, send the video their way, guys. I mean, but yeah, I we have a couple people in the company who actually live up where you are, in Michigan. She lives in Ohio. Um, and she says it's not like quite there yet, but it's like getting worse. I live in Kansas City. We haven't gotten any of it. No smoke. Um, but yeah, Canada, I think they should be prosecuted for this environmental destruction that they're causing. They need to get their wildfires under control. They want to get mad at everybody else, but it's time for them to get their wildfires under control, man. Like, what's going on? You know, jeez, come on, Canada, step it up. Hopefully, we don't have any Canadians in here. I don't mean to offend anybody, but hey, gotta get it figured out, man. We need to work together with Canada. Yeah, Canada's a good ally, man. We've always been cool with Canada. We've always been cool with Canada. So, let's see here. Anybody trading any? I think we have earnings next week. Looks like on the week of July 20th, we got a lot of big earnings. The link in one click does not work. Oh no, that's not good. What program is that, Eric? Was that like one percenters or something? The thing is, any of the Market Masters links should be directed to this room. Like, even if you accidentally went to the other room, it should be redirecting you here. Um, so it looks like next week we do have some big earnings. Monday we get AMC before the market opens. So if you guys trade AMC, you like trading meme stocks. I just heard a whisper.
All right.
Are you okay there, Jeffrey? Did the SpaceX launch take you out?
Dude, I
Took your
don't know what's
systems
kind of
out?
happening.
No. Well, I thought something
Oh,
might have been wrong.
I'm trying to figure out what's going on. Hold on.
Oh, okay. Darn it. So they got the link. What I can do is I can let me just do that. And that right there should, in theory, take you to this Zoom room. So
Let me reboot real quick. I don't know what's going on.
yeah,
The camera
that's
won't,
okay.
my camera won't start. I just had to, I unplugged the microphone and plugged it back in and it came back on, but my camera won't come on. So let me reboot really quickly.
Yeah,
I'll be
take your
right back.
time. I'll hold it down.
I'll be right back, everybody. Sorry.
Okay. I did just let the team know as well, and I also okay, yep. So now I have it redirected. The link will take you directly to the Zoom room um now. So everybody will get an invite to join Market Masters. Yep, I fixed. That's because I fixed it there, Svinborn. Maybe I shouldn't have force redirected everybody, but oh well. Welcome into Market Masters. Um, I might have just force redirected like 20 or 30 people, but you know what? It's okay. Yeah, 12 people might have got force redirected, but maybe they were all waiting for market masters. So it's all good. It's all good. We got everybody a little uptick in the room. So I guess I did something right there. Um, took matters into my own hands, right? Sometimes that's what you got to do. So Jeffrey's making his way. SpaceX, what a dud. Yeah. So Don brings up a very good point. And I guess I do have the charts up, so I guess I could show you guys on the actual charts here while we wait for Jeffrey to get back. So I use Thinkorswim and TradingView. I don't have TradingView on this computer, but basically, so SpaceX, we can take a look. Yeah, Donna's making really good points. Friday, breathe, chill out a bit. I agree with that. Still a lot of good trading to be had. Um, you say it like it's a bad thing for us. Well, basically, if you were sitting in that room, then you got a prompt to join this room. So, um, you know, but honestly, if it was directing people to that room, I'm okay with Forrest redirecting anybody in that room because that brings them right to the show. Um, so if you look here at SpaceX, there's two levels that actually got put in on my system, and 138 and 128 or 126. Yes, that's me, Joe. I'm the little master in growing. So 126.89 got rejected, and they put that level in actually last night off the SpaceX like failed launch. That's basically what happened. SpaceX failed their launch, and now they're going lower today. They're actually down about 6% today. Now, I don't have the image, but basically most IPOs, right? So we'll just go to like far out as we can. So most IPOs, I'll draw on the screen here. So 50% down 1 year. This is AVG average. So on average, most IPOs go down 50% the first year that they're trading. Now that's based on the IPO price. So SpaceX IPO'd at 135. So if we whip out a calculator and we'll just do the average, right? So it's like 50%. So 135 divided by 50. Oops, I'm sorry. 135 divided by 2 is 67.5. Yeah, Don said 68. Thank you. You guys are all mathematicians. So 67, $60, $70, $80, maybe lower down to 50. Realistically, you might be able to get away with setting some buy orders, right? Like it could come down there and fill you potentially one day. So, I wouldn't be surprised if that does happen. I mean, at the end of the day, right? Like this is all within the mean. Like I saw a bunch of people worried yesterday, on Profit Panel about SpaceX. It's like, yeah, if you knew this, this is not a surprise. Oh, Jeffrey's back.
Yeah, I was gonna say, what are you trying to get everybody to buy?
No,
What are
no,
you
no.
what are you shilling?
I'm not. I'm shilling. I'm shilling the fact that SpaceX is probably going to drop 50%.
Yeah, from the IPO price, not from the high.
Right. Like,
We're already down 50% from the high. So
yeah. So we could have some more to go down if,
yeah.
you know, they have
I
earnings
told
too.
I said that I'm a buyer under 100 probably.
I think that's a good level to start, maybe loading up some more shares. I mean, I still have a couple that I bought, initially that I guess I should have sold. But, I was like, hey, maybe we defy the odds. But when
And just in
surprise.
case you didn't talk about this though, all trading involves a substantial risk of loss. Past performance is not necessarily indicative of future results, and this presentation is intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including SpaceX, stocks, options, bonds, forex, futures, cryptos, treasuries, betting markets. 95% of traders tend to lose money, so be careful out there. Permacautious is the name of the game for me. I have high degree of caution when I put my money at risk in the markets. And if you need somebody to tell you what to do and how to protect it, you can hire and consult somebody. All right, back to it here. Let's see, 30 of May should be market masters here. What do we got? What do you say? This is a little hiccup here today. Blakester, a little bit of pullback.
Yeah, little bit of a pullback is right.
But it's not like everybody's like, oh my gosh, it seems like we're burning down, but that's not really, I mean, we're still in the upper end of the range here that we've been in since beginning of June when we topped out. Really, we're just where we've been since beginning of May. Just to put it in perspective for everybody. Now, individual stocks could be down more or less, but the general market is sitting basically exactly where we've been since early May. Not really higher, not really lower. Despite what the president was saying on his speech last night at all-time highs. I mean, we're in the vicinity, I guess, but we're not really just setting that every day. Now, NASDAQ here, on the other hand, a little bit uglier. And we're looking for this, as I've talked about for since we made this low, we're probably going to make a low lower than that low. Today we got in the vicinity here. We'll have to
look
actually
at
look and
that.
see if we actually made the lower low. Put our hand over here, we see 28,196. And we put our hand over here and we see 28,231. 231 is higher than 196, so we have not yet made a lower low. So there's probably more to go here. Probably not quite finished up. We have one more little push at least.
Did you
And
you see the
did I what?
reaction off those lows though this morning?
Yeah. I mean, we got buying, but
That was
if we
crazy.
if we come down in here, I mean, look at that candle.
Oh yeah.
It's not really indicative of a bottom yet. I mean, we did have a push and a flush down and a take it right back.
Mm-hmm.
But this is not the kind of price action you would expect if we're gonna all of a sudden recover. This
Well,
looks to me, this looks like a 1, 2, 3. We'll probably mess around in here through Monday, 4 and a 5, probably on
mm-hmm.
Tuesday, something like that. I mean, this could wrap up on Monday, but as long as we are underneath this gets really simple on the futures. As long as we're underneath this low right here from yesterday, or from Wednesday, excuse me, from Wednesday. As long as we're underneath that low from Wednesday, the direction is down.
Yeah.
And this is
Oh yeah.
very clear on the futures. It is not very clear on like QQQ or NDX. I popped in right as Blake was saying, we don't trade futures here, but there's a clarity you can see on futures charts that you can't find in other charts, technically, because futures trade 23 hours a day, 6 days a week. There's nothing else that we have in the market that trades with this frequency right here. Even QQQ takes a break from like 8 p.m. till 4 a.m. You'd be like, well, what about perpetual contracts? And those are all derivatives. The futures market is the OG here, and it has the best liquidity. So it provides the most clarity. And this is where I kind of watch a lot of times. Now, this is the low at this point. This is the first move up. We're probably working on some sort of three-wave retrace, and then we may see some sort of pop-up like this, and then we may see that final flush on this. On that would just conclude this move right here. Then we could see a three-wave retrace, and what happens here, which is going to be in the vicinity of this probably, is going to tell us whether we're going back to all-time highs or we got more unfinished business on the downside. So that's what we got right at the moment. Now, S&P is a little different in this regard. And this is Elliott wave theory. If you have no idea what I'm doing or don't really understand it, that's okay. It's the concept that the market moves in trending moves. We call them impulsive moves. And it does it in a five-wave fashion where the first move and the fourth move do not overlap. Now, corrective moves, which are the two and the four, this is the first move, this is the second move, this is the third move, this is the fourth move, and this is the fifth move. Waves two and four tend to work in some combination of three.
Mm-hmm.
I usually call them absolutely beautiful corrections because they're very predictable, proportion wise. Duration wise, they're not so predictable. But when they show up with very nice proportions, usually you get continuation. I'm a trend pullback continuation trader. I love to catch these continuations. I love to catch wave threes. That's typically the biggest, most powerful wave in the cycle. Now, five waves can occur this way too. This would be the one, this would be the two, this would be the three, this would be the four, and this would be the five. Now, an interesting thing in here also is that wave ones and wave fives tend to be the same size. Three tends to be the biggest, two tends to be the fastest correction, and four tends to be 3 to 5 times longer than the two. So there's some typicalities, but those aren't rules. Some of the other rules are 1 and 4 cannot overlap. Wave 2 can never go below the start point. And other than that, there's a lot of there's a lot of like could happens. Interesting B waves. Now, if you have like an A, B, C, B waves can go above the start point, but wave twos cannot. So this is an A, B, C. That's one way you can, like if it's corrective in nature, we get a three wave up and it goes higher and then immediately reverses. It's probably an ABC, not a 1, 2, 3. Twos cannot go above the 0 point. Then you have a 3, then you would watch. And if the 4 stays below the 1, if this correction stays below the 1, you're probably going to get a 5 down. Now, 5 down usually brings a 3-wave correction back to a 618 proportion. And then 5 down, 3 up usually is followed by another 5 down. And this would probably be an A, a B, and a C of a bigger correction. So these things are all self-similar. Each piece is made up of the same sort of pieces. So a wave 1 is made up itself of 1, 2, 3, 4, 5. And then that breaks down until you can't make out a squiggle on the chart anymore, on the tick chart. And futures generally have the cleanest, well, I'm not going to say the absolute cleanest, but they have the best representation of these moves.
They really do. I mean, I tell everybody, I'm like, I look at the futures, like, not that I encourage anybody to trade them, but I look at the futures charts because compared to the SPY or QQQ, TQ, whatever, it just looks so much better. Like, you can see a real picture of the market when you look at the futures versus the indexes. Because
I see
SPX and
this.
NDX will have those gaps.
Yeah, you could make the case that this move right here was 5 down into that low, and now we're working on this 3-wave retrace, and then we'll see what happens
Right.
on the ES. Now, NQ looked different.
It did. It looked a lot different. And Donna's
So,
asking if this will be on YouTube. Yes, it will.
and this is just Elliott wave theory. Tons of people teach it. I'm just breaking it down real simple. My trend pullback continuation trades are trades inside Elliott wave theory. And right now, this looks like a wave one up. This looks like a wave two retrace and possibly a wave. So we'll see if it's a three or if it's an a B, and this is a C. Now, one of the ways that I kind of measure this out and look at it, go off the low, you go off the high. We made a 50% retrace. The reason I color these fibs this way, typically, this is the zone between the blues that we would get in a wave two or a wave B retrace. The 618, the reason it's colored purple is that is the ideal, like proportion wise, that's the ideal place for a correction to hit and bounce. We don't get ideal moves all the time. The market loves to make things less clear. We bounced off of 50. That good enough. Now, when we start at the low, we come back to the high. We use this 3-point tool. I call it a 3-point tool because this fib retracement tool takes 2 clicks. I call it the 2-point fib tool. This fib trend-based fib extension tool takes 3 clicks. It has 1, 2, 3 dots on it. So you put the 1 right there, the 2 right there, the 3 right here, and this gives us a projection. What it does is it compares this move right here to what would happen off of here. And funny enough, you can't make this up, like proportional wise. Look at where that 100% hits right on that 618 line of the bigger trend down. This is probably what we're going to do. We're probably going to rally right up here, and then we'll test that. If we break through, here's the uprights here, the blue zone. If we break through, we're going back higher. If we reject off of that, we're probably coming back to a lower low. This is the trend. This is the 3-wave pullback. This would be the continuation lower. A, B, C. Are there any guarantees here? No. Like this could get continuation up here, pull back a little bit, not overlap this, and turn into a 1, 2, 3, 4, 5 up. And then that's impulsive. Now the difference generally between an ABC, just let me draw. TradingView has these handy dandy labels here for Elliott wave stuff. Now, C's typically stop in this vicinity between the 100 and the 1272. Sometimes push a little bit further past that. Right, this would be a C wave right in here. A equals C, where A wave and the C wave are equal. That's a very common place. A times 1.272 equals C. So the C wave is 1.272 times bigger than the A wave is another very common place. And that leaves this is an ideal spot for a 3-wave correction to stop, which is right in that bigger retrace zone for that potential 5 down off of this high we made on Thursday, yesterday morning, to this low that we made today, right at the open. I mean, you can't make these proportions up. Like this is setting up very classically. That move down, this retrace. And if we get a continuation, what would that look like? Again, same 3-point fib tool. Go from that high, go down to this low, this potential bounce point. You're like, oh, this is getting blurry down here. Just remove it. And the potential downside is the same kind of proportion here, just bigger. The little moves make up the same as the big moves. And if we're going to get further downside, we would push on down to here. This could potentially become a 1, a 2, a 3. We'd get a retrace. We'd hold below that. And we get another move that was as big as the first move. This is how I make price predictions. These things stack up. They go all the way up to the daily charts. And this is how I know where things are going. Like gold, I've been saying it's going to go lower low for months and months and months. And then today we were scratching right down there, trying to make the lower low. We didn't quite complete it yet, though. We got this little bounce. We're probably still gunning for a lower low than what we did just a couple weeks ago over here. When we did this dip back in June, we're probably still gunning for a low lower than that low. Came up just shy of that today. Same sort of stuff. All this price action. Now, you may be sitting there going, golly, man, this is like blowing my mind and like it's too much to keep up with. That's cool. That's why I sit here and do it. That's why I go live on YouTube every day and break down where I think price is going. It's all based on this stuff right here. I break it all down. I show you where my targets are. An example of a trend pullback continuation that just played out is right here. It was beautiful. Now, my roadmap line tends to be where twos and fours will bottom out. Three-wave retrace right there. Look at that. Beautiful. Bounce right off the roadmap line. We pushed through the 618 right here, and we got the extension right here. Without even any fib lines on here. But look, when we put this fib line here, we put it down to here, we touch that 50%. Classic A, B, right? Put this other fib line on. 3-point tool, one move, two moves, three moves, right to ABC proportions. Can't make this stuff up. This is how the market moves. Like, once I figured this out, it unlocked the ability to make trades and predict where price was going to go next. Look at that beautiful hit right there, right at the A equals C. We reversed hard, got the close above the 618, which we have to pull. Can't just leave this up here. You have to pull it all the way down to the lowest low. And funny enough, these B waves tend to, there's usually a consolidation on the way down where the 618 will actually end up being on the whole move from the high to the low. Then we got the close above right here with this candle that set up my proportions that I always talk about right here. 70% likely we would hit the 1272. And by going 10% down, 90% of the way to the 1272, it was 75% likely to hit that level. But we just went ahead and hit the bigger level right there. And that's your two targets. Conservative target. You can be super conservative and just target the prior high, but you could be a conservative target at the 1.1448 or more aggressive target at the 1272. Now, maybe like, well, why wouldn't we just cruise on up to the next fib level? And that's where we tend to drop off the probability just a little bit, because this drops off to 35% that we'll just reach up there. 70% here, so that means we lose 50% of our upside probability just going for that little bit extra right there. I'd rather lock in the 75% than risk it all going for something that's 30% likely. That's just me. I like to go after higher probability stuff. Cautious, remember, back to the whole thing. So you look at this and you're like, all right, on this move up on Apple, off of that low, is this played out? And it kind of looks like it might be played out a little bit, because we have, to grab the 5-wave thing here, we have this low down in here, have this move up, we have a retrace, we have a third move up, we have another sloppy consolidation in here. You know, we could say the third is, oops, I clicked one too many. Could say the third is ended up here. So 1, 2, 3, 4, 5. Now the 3 has to have 5 waves in it. So 1, 2, 3, 4, 5. So that works. And this could be nearing the played out point. How will we know if it's actually played out or not? You run this fib line with the 3-point tool, compare the size of wave 1 off of the 4 to the size of the 5, and we're already exceeding, the 5 is exceeding the size of wave 1 down here. So this thing is probably nearing played out. And we're probably going to do a retrace somewhere back down in this vicinity at least, because when you have a 5 up, that turns into a bigger degree wave 1. Then we get a correction, and the wave two correction tends to bottom in the vicinity of the fours of the lower degree if we're going to go higher. But here's where you don't know. If we don't hold this support, this could have been the end of the end of the end of the move, and we could correct a bigger correction down to a further wave four of a lower degree, like something back down here where we consolidated, or something back down here where we consolidated. This is where you got to keep track of you got to stack it all the way up if you're going to keep track of these bigger moves, and you got to go all the way down. I like to just take advantage of the small moves and then get the heck out. Not worry about the big moves, because the big moves can take years to play out. Anybody think this is cool so far?
Man, this is a good. Donna says this is the best, clearest lesson in Elliott Wave she's ever experienced. So
it's this is I spent a long time learning Elliott Wave, and then I tried to figure like okay, great. You figure out what count you're in. Figuring out what count you're in doesn't make you the money. Recognizing patterns that are reliable and repeatable, and then going through in the market and finding these patterns that just repeat and taking advantage of them, and then leaving it alone until it sets up this high probability pattern again is where I make lots of money in the market and have made lots of money in the market. And one of the clearest examples of this was Rocket Lab last summer, right here. Or, last summer's when I made the big chunk. It did this same sort of three-wave correction right there. It reversed. It happened to pause right in this zone for me long enough. Let me make a couple of chart adjustments here. Long enough for me to chase this thing with some puts, sold puts, sold puts, sold puts, dipped in here, put me on a Friday, and then promptly took off. Now, it didn't slow down at the 1448. It didn't slow down. I mean, it slowed down for like a day at the 1272. And it rallied on up to the 1618. Had a lot of enthusiasm. I actually bought back a call right in here so I could sell a new call up here higher and book another couple grand. And this was just doing the wheel type trades on something I thought was going to be extra bullish. And it turned out it actually was extra bullish. And in this case, the wave 5 way exceeded what looks like the 1, 2, 3, 4, and then the 5 was bigger. And sometimes you get wave 5 extensions. But then what happened after we hit that 1618? We came all the way back down to the roadmap line. Oh, that was this year's. This was last year's. Here's last year's. Sorry. Again, same three-wave thing. High, low, this one kind of truncated a little bit here at the bottom, but we bounced up. It's almost the same price action here. It's kind of crazy. Does this over and over. Here's the consolidation. Dipped in there, got me put, and then went on a ride. I got out right there. Just right under, I was trading just under the 1618. Bought it back as we cruised on through. These things just do this over and over and over. All these charts. If you can just pick it up and grab a piece. It confused me because it looks the same. Like it just does the same pattern again. I traded this one right here. This one was a fast retrace, and I wasn't so sure on it. It didn't have a clear three-wave here. Nice speedy retrace. I was like, when it did this little dip right here, I was like, well, I'll take a shot. Did a call spread. Bought a closer call, sold a higher up call, and when it went through, I ended up making like 300%. Then I got the heck out and just waited for it to bounce again. This one, I wasn't feeling it because we were coming into the SpaceX IPO. I just left it alone. And right now, we're working on a three-wave correction that's a little bigger. Move down, retrace. We're probably gunning for a level right down in here. Now, technically, the only thing on a correction that has to happen, back to the rules, you get a first move down, you get a retrace. The only thing that has to happen is a move past the A, and then you could be complete. Even if it's a crappy proportion, even if it's only like 0.618 times the A equals C. That could still be complete if you got the move that exceeded the A. And then you can go on. And this one's moved on down. And to be proportionally, one of the classic proportions, I want to see it push just a little bit lower. So A equals C. This one right here is A times 1,272 equals C. Right there. Getting sloppy trying to write small with a big fat crown. Anyway, so these moves just happen over and over in the market. And that's, I'm sitting here trying to find them, trying to take advantage of them. And that's why I did this trade on B for this Friday for today. We have this move down. We have this three-wave retrace up. We have this move down. And hold on one second, Blake. Somebody just came in my office and they're yelling in here.
They're yelling. Oh, what just happened to Jeffrey? Someone's in the office and they're hollering. Can one of you guys pull up to Jeffrey's office? Or is that just the UPS man? Hey, you know what though? It happened to me. I was on Profit Panel yesterday, and the UPS guy showed up at my door, and my dog just lost it. I mean, she just lost her mind. And I'm like, I gotta mute. I can't say anything. She's barking. I had this black screen. One time, my mother-in-law was over here. She was taking care of my daughter, and I just heard her bust out crying. I was like, gotta go, man. So, um,
All right, sorry about that.
you good?
So
Was it a
my
irate customer?
no, it's our engineering business. I'm apparently the only one in the office at the moment, and
Oh,
a client came in to want to write a check.
all right.
Don't turn down money. Anyway,
Don't put her down, buddy.
first rule of business.
That's right.
So anyway, B Barrick Mining here, probably going to go for a lower low, and we see this across several different. Now this one already made the lower low. Like, look at that. A, B, C, potentially complete. Now throw some proportions to it. First move down, the retrace could get a little bit further, a little bit more downside. Just looking at the GLD chart, we had this high up here, this first move down, came up to that 50%, looking like an A, a B, and this right here did make a lower low today or yesterday. And we put the proportions on it, high, low, high, potential for one more little push. That would bring all these like gold charts into alignment. And that's one reason why I was on B for this Friday. And I need to load up the trading platform because I need to roll that trade forward and show you what I'm doing here. Or we run out of market masters here. Trading platform go. There it goes. Installing a new version, blah, blah, blah. All right. Log in. This is one of those things like we sold puts on this on B. Flip back to B. And somebody was having trouble pulling up B. If you just put it to US stocks, you can find B right here. You may pull up some other stock, some other place. I have US stocks turned on. So when I type in B, it pulls up the US stocks. But yeah, yeah, you can see all these other Bs that pull up here. Different countries, different things. So jumping over to my trading platform, grabbing the B position. Here we are, OPEX day. I'm in the money, could get put. Now, a couple things to look at. Next week, what's my position? Just refresh really quickly what I have. I sold the 36 put for this Friday. We did that on the 6th, right here during the show. That was quite a few days ago. Got 47 cents for it. Look at it right now. It's if I was going to close it out, it's going to cost me a little bit of money. It is slightly down. It's in the money, right? 92 cents is what the platform says. It says I'm up for today, down 45 bucks on that money. I'm using 3,600 bucks for that one put. Just right here in the middle. And percentage of profit, 27%. It could rally up by the end of the day. It is up for today. Now, how do we know whether we should roll or whether we should just take the shares? Now, one way I do this, I look at that 36, I jump out the next week. 36, if I was going to sell upside calls, I can get 50 for it. 46, 46.50, somewhere in there. These numbers have changed quite a bit since earlier. Now, if I go roll it, and I like the handy dandy platform right here because you can just pop on and roll. We come in and look, and I can get 40 for rolling the put out a week. But I could potentially get 55, or I can move up and get gain on the stock and still get paid by taking these shares. So really, at the earlier, my decision was going to be to roll. Right now, because I could actually make more money on a roll than I could selling the upside call. But now that we've gotten a bounce in gold a little bit here, it's looking like it might be the better decision to take the shares and then come in on Monday and decide which calls to sell. All right. It's just a matter of how much can I get paid and what's the goal here. Now, could this dip on down here in the 30, 31, 29, 30, 31 area? Sure. Absolutely. Would I be underwater if I took it at 36 and this dipped on down to 30? Yeah, potentially be $6 underwater, minus the 47 cents I got paid to make the agreement to buy it, and then whatever calls I can sell up here above 36. And maybe next week is not the ideal week to sell. How do we figure that out? We roll down here and take a look at this. And it looks like 1 month out is actually the best place to sell for the best premium, not 1 week out. So we go jump in there and we look at 1 month out, which is comes out after earnings. And that 37, look at that. If I go ahead and take these, I can get paid $1 for a 37 or even 80 cents for 38. So I'm probably going to go ahead and take these. And then Monday, we'll probably look at, the intention was always to take these because the upside potential here, here's the high, here's the low. If this is the bottom, remember, it already satisfied the only thing that had to happen. Could it go lower? Absolutely. Could it bounce here? Absolutely. Remember what I said, we tend to consolidate right at the 618 on the way down. This is looking like that 618 may be the place. When we get the close above that 618, it triggers that 75% likely move to 58, 70% to 61, and 35 to 72. These are the high probability targets. If I got put shares here, got called out up here, That's almost not quite doubling my money, but like 80% upside move right there. Going from 36 to 70% upside move right there. If we went all the way off this low, almost 80% move. And that's this is how I do it. Like this is how very quickly, I do this all in my head. I don't sit here and break it all down because I've literally looked at tens of thousands of charts in the last 12 months.
Oh
And
yeah.
over the last couple of years, over the last 20 years, I've looked at hundreds and hundreds, if not millions of different charts, different time frames, different, different snapshots. Every time I pull up a chart, I consider it a different chart. So I've looked at hundreds of thousands of charts. How do you get better at this than everybody else? You do more work than everybody else. You learn these patterns. See, there's a 3-wave down, 3-wave up, and a 5-wave down. That's potentially complete. That's why I started going after this 11 days ago. It was potentially completing the pattern. Now, 11 days ago, NEM didn't really have this final move. It looked like it needed further to go. AU didn't have this final move down. It looked like it had further to go. So out of these, B looked like the best one. Plus, it's lower price than Ashanti or Newmont. Now, there's probably a reason why it's lower priced than Ashanti or Newmont. But I look at it as a better opportunity, dollar cost, risk wise, the amount of money I have involved for the return. The beta sitting at 1.7 right now. That's pretty fair. It's in the zone. Now, look at another one we did on Monday, IREN. We did this one out for next Friday, not this Friday. We did this on Monday. Just coming in, checking on the maintenance here. That could be the first move down. This could have been the retrace, lower high. And this could get an extension down in here. I did the 28 strike. If you didn't do it with us Monday, you could probably do it today and get on down here just a little bit. Now, I can a lot of times look at one of these charts and see where the fib lines are without even drawing them. 28. 28 comes in just right at the top of the zone. 22 comes in down here at the bottom of the zone. If this was an A, B, C. This is how it works. Like, this is how I do it over and over and over.
Yeah, this is I tried, Jeffrey, I tried to learn Elliott Wave a while back. I guess I should have just waited for this lesson.
Now, this did push the limits here. It poked above the uprights, right? First move down, the retrace, poked above, but then we retraced. And on this final move here, we've done 1, 2, 3, 4, 5. Could it be done here? It's possible. Is it probably going to dip below that A? Yeah, probably. But it might finish up right at 28 and then put me in the shares and then take off. Like, what happens after this is complete? Let's just guess it stops right around 27.50. Could bounce here, get the close above the 618 and 88. Well, shoot, man, going from 28 up to 88. That right there is a pretty good deal. That's almost 3 times your money. Plus, you could sell some calls along the way. I mean, 220%. How do you catch these big moves with something like the wheel? By going after a trade like this. Is there a guarantee it does this? Absolutely not. Could this end up being a bigger A? We do a 3-wave retrace into the here for a B, and then we do a bigger downside move for a C. Yeah, that's 100% possible right here. And that's why getting out in this vicinity could be the best play. Double your money, get the heck out, wait to see what happens. hood.
Oh, here's a good one. You kind of called the top on this one a while back, huh?
Oh, remember what I said that
618.
we might come back to the roadmap line, which is exactly what we're doing right here. It's it's just years and years of watching these same patterns play out over and over. We had this 618 resistance right here. I told Jack it was likely to pull back. We were likely to pull back the same into this, $70 vicinity right here. We actually pushed it just a little bit lower. Then we turned and we rallied up. And I got off of my positions right here. We pulled back and rallied just a little bit higher because I expected it to hit the roadmap line. We came up shy right there, and I'm just kind of waiting for the roadmap line hit. Now, it may not happen. I may wait too long and miss out. This technically, it would be a smart thing to start selling puts again after this dip because we already got the close above this 618. That already tipped the odds. We're going up to 175. It's already activated. Like this, the pattern, the statistics are already activated here. This first move down to the roadmap line, this retrace right here, this third move down, it got really big. That's why I expected it to just stop at the 70 area, not get the little extra, but it went ahead and did the little extra. Sometimes they get a little enthusiastic. They got to bum everybody out before they can turn. But this is why I thought and I thought we'd do that 70 area before we even did that because this is where it gets a little bit mind blowing. This correction right here was the same kind of general size correction as what we've done a couple times before. And if you put it off of there, look where it came out. Right in that 70 area. And then after we did the initial dip and the retrace, it kind of confirmed with fib lines in the same vicinity here. I have to tighten these up just a little bit. Fib line is same. Look at that. Same. This is just a copy of the move we did before. Put off the high. And then that first drop and that retrace and the extension came out to the same place. That's confluence doing it two different ways. It gave me extreme confidence to start selling puts here in February on Hood. This was one of the most profitable trades I've done this year doing the wheel. Sold it, got put some, popped up, got called out. And I've just been waiting. I'm like, I might sell more puts on it again. The
Still
bait
like
on
it?
this thing, I mean, yeah, I still think it's like 75% likely we're going on up to 175. And the beta is at almost 4. It's like the highest beta thing out here, especially for a regular stock and not some sort of crazy leveraged ETF. Seasonality wise, there's lots of pieces of this that just fit. This could be like the Rocket Lab moment here. You get the opportunity to get put, it puts you, and then boom, right up in here. Now the crazy thing, this is the target right here. 175. I'm not saying this has to happen or can happen or will happen. 75% odds based on this pattern continuing that we'll see that price. 70% odds that we'll see this price. 35% odds we'll see this price up here, which is the 266 right there. Now, this is where it gets wild though, because if you look at this move that we did right back here, right back in 23, pull this up, look at that, almost the same size move, just a little bit bigger. And so we'll go off of that low, we'll pull it up just a little bit more. went a little bit bigger. Then we compare it last year, same size move. So that was 23, 24, 25. And if we go off of the low that we made right here, the potential for this thing, if we just do the same thing we've done 3 years in a row, a fourth year, puts it up here at 300. A little bit above that 266. And that's why I say it's a fair opportunity right here. Like, could it fail? Absolutely. Could this be the first move down, the retrace, and this go down here? Absolutely. 100% chance that that could happen. Like that's an absolute 100%, possibility thing that could happen right there. How do you know if we're going higher or lower? We're going to hold this roadmap line. We're going to turn back higher, break back up, going up, hit that target, maybe retrace a little bit, maybe get some extension, maybe retrace a little bit, and then get the extension. And then that kind of looks like a 1, 2 with a 1, 2, 3, 4, 5, 4, 5, 4, 5, all the way up there. Oop, I grabbed the zoom window accidentally there. Hopefully I'm still sharing.
Yeah, you're good.
I grabbed the screen share and flipped that around there.
So say you didn't have the ability to sell puts because it's kind of pricey to sell. It's like 10 grand, right? Like roughly to sell a put right now on Hood. Could you take like a bull call spread? Like, I don't know, maybe like a year out or something?
So, yeah, I mean, there's lots of possibilities, right? You got to make what's your thesis? What do you think is going to happen? Where are you right? Where are you wrong? Where are you going to target? Are you going to target the bigger move? Like, there's no guarantees that that plays out. I mean,
Right.
it's played out. It's played out a few years in a row, but there's no guarantee that this is going to play out again without some sort of bigger correction, or it may never get there. I mean, it's possible that Hood goes out of business tomorrow.
Yeah, it's true. They could file Chapter 11.
Unlikely, but it's possible. Now, you kind of have to come up with what your expectation is. Now, I've got statistics that say this level is 75% likely. If that's kind of your thesis and everything, how would you know where to target? Like, how long out? Where we would play, right? One easy way is the climb rate typically stays the same on these things. Look at the climb rate here, compare it back in here, compare it back in here, compare it back in here. The climb rate on these stocks on a stock tends to be about the same. That's kind of the climb rate that we've had on Hood. Could it go faster? Absolutely. Can it go slower? Absolutely. If we just kind of stuck with the normal kind of climb rate, sometimes it's gone a little faster, sometimes it's gone a little slower. That would put us right out at least November, December. Now, if it goes a little slower, you don't want to run out of time. So you probably want to be out maybe March. And this is how you get set up like a directional trade if you're going to be a directional type trader. If you're going to be like an income trader, you could sell a credit spread right here below the roadmap line out toward like the end of the year. If this goes on higher, you made some income. That would be, I mean, you could play the same time frame, even like out to March. Come in here, you're like, well, I think the bottom's in. I could sell an 85. I could buy like a 70, bring in like $500, and you play that out for 245 days. Could you play it shorter? Yeah. Could you also get in trouble if it dipped? Yeah. If you didn't believe it was going to go lower low, you could come down here to like a 70, like play like the same kind of risk, 70, 55. You get paid $4 instead of $5. That's an income trade type thing too. You don't necessarily have to take the shares. Could you play it tighter? One strike wide? Yeah, you get paid less. $500 risk per contract, you get paid $100. Maybe instead of going like this, get paid $4, you get paid $1 and do it like 3 times bigger. I can't say what's right for you and your account. I would probably do the 15 wide and get paid the $4 instead of doing the 5 wide. You get paid $1.
Yeah, I would
Now,
agree with that.
I mean, $4 is bigger than 330 and paying the extra commissions. Now, as Blake was asking, could you do a something like a call debit spread? So we've got our target, right? 175. We've got an approximate time frame. We're going to add a little extra just in case. So we'll be out to March.
Add a little buffer.
A little buffer. So the market doesn't think we're going up here. How do I know? It's because the at the money spread right here is 48. One standard deviation added to that is 100, basically 155. And that's where we see this line coming in here just above, 165.
Mm-hmm.
They're pricing in that basically 0.32 delta right there comes in right there at 160. So the market's saying, we don't think, back to what Jack said, the market makers are pricing in a move that they don't want to lose money on, and that move is only up to 165. So if we wanted to catch a big chunk of that move, we'd have to buy an option closer to the money, and we have to sell one further out. That would capture $35 of the move. How do I know that? 175 minus 140 is 35. That's $35 of the move. What does that cost us? It costs us 567 right now. Why'd I pick $35? It was just my educated wild guess looking at thousands of option chains over the years. I looked at these numbers and something spoke to me and said, you could probably get about a 5-to-1 risk reward. It's actually closer to 7 here. Well, 6 probably.
Yeah.
We'll do the numbers here in a second.
Yeah, because if you put that in for 567, I don't know if you're going to get filled for that.
You might not. You might
You
get filled at
might.
6.
You'd have to press the
Um,
button and find out because then the chain will move.
yeah, there's not a lot of, I mean, there's some people playing here, but there's probably not a lot of volume on this today. A couple contracts, not much on, none on this contract. A few contracts up here.
Yeah.
So you're not all alone, but it is less.
Few and far between.
So 35 is the max profit. We have to subtract off, let's EWAG it that we get filled for 6. Well, minus 6. So 29 would be our ultimate profit if we got filled at 6. 29 divided by 6. That'd be 4.8, like I said, almost 5-to-1. I thought I could get in for roughly 5-to-1. If we got filled at 567, be a little different numbers here. 35 minus 5.67, 0.933 divided by 5.67. Yeah, 5-to-1. That was pretty close. You may be like, how in the world did you see a 5-to-1 right there with those numbers? Just comes from years of practice and a little bit of my special ability that I can see these things on the option chart without doing the numbers. I can't explain it. Like
You can't explain it, folks.
I can't. I've never been able to explain it. I've had this ability to look at an option chain and kind of pick out a trade and with the risk and everything.
I,
Um,
I asked my
I've had that
buddy one
ability.
time. Why are you doing that? We are talking about trading, and he's like, Blake, he's like, it's because it is what it is the way that it is. Because of the way that it is, you can see that this is why. It's the way that it is. So
And,
Jeffrey, it's the way that it is.
yeah, I
140,
mean,
175, just the way it is.
yeah, I told you like it's about a 5-to-1 risk reward, and that's like I got it within a decimal point, basically. That's pretty wild.
And that's the way that it is.
Yeah, I can sit here and pop up a chain. Now, can I pick it out every single time instantly? No. Do I like a 5 to 1 when I'm doing something like this? I usually try to go for like a 10 to 1,
Yeah,
but 10 to 1's not present in this chain right here.
right.
I can just see it right there. Now, if we exceeded the 175 and went ripping on up to like 300, they don't even have a 300. And you could make bigger money if we did like a 200, 300 or something like that.
Right.
Or a 190, clear this off. If you did something like a one, like if this was going to go really crazy,
Woo.
that 192, 290, that's 100, and it's going to cost us four. So that's like a 20 to 1.
But there's a $10,000 max profit.
Yeah, per contract. So sad. Risk 400 to make 10,000.
Oh. Even if you made half that, I think that's fine.
But again, the high probability move doesn't go past 175. So this
Right.
would be like we got really, really lucky because the market's
Right.
not pricing this move in. So it's this is a 100 point wide. It's going to cost us roughly 421. It's 95.79 divided by 421, 20 to 1. Make 20 times your money. Isn't that crazy?
That's pretty
Those kind of
crazy.
things, those things exist. We'd have to get really lucky on the target though. It'd have to go through 290 by March of next year.
Which, I mean,
Which, if it just repeated what it's done,
there's a good chance that it could.
there's a non-zero chance. The market says at this current date and hour, there's a 10% chance of this actually
Oh,
happening.
okay. So
Option
you're
prices
saying
say
there's a chance.
the options market thinks it's 10% likely. So this is where you have to make your own choice. Like, do you believe it's going to happen, or do you have high conviction in this, or you're just not sure? You're just taking the word of some joker that's sitting here on Market Masters that makes predictions that sometimes they get lucky.
I mean, I
I'm
wouldn't
not.
be, I mean, this is the same guy right here, Jeffrey, who called this massive sell off like 3 weeks ago. So,
I've only been talking about this the Q's selling off further for a long time. So, and then we look at AVGO. It's sitting on the roadmap line. We look at SNDK. It's probably got more to come back to the roadmap line.
good old SanDisk. I know that's a.
Jack could be getting put those shares next month. We'll
I
see.
hope not.
Look at that. Back down in that 1140 area.
I hope he takes the money and run like the Steve Miller band.
Mm, could it happen? Absolutely. WDC probably coming back to the roadmap line. Look how close we've gotten. Be a shame if we didn't just finish this up. STX probably coming back to the roadmap line. MU probably coming back
Probably
to the
coming back to
roadmap
the
line.
roadmap.
I mean, this is like
That
PRT.
came back
Oh,
to the roadmap
it actually touched.
already. Look at that.
PL went a little through. This didn't bounce at all till we hit the roadmap line. Then we bounced. Didn't touch the 50. So the proportions are not ideal here, but we could see something on down just a little bit lower. Now it's debatable on is it log mode, is it not log mode? I'm not sure. A bottom in the vicinity of this prior consolidation here, which is what we've kind of got happening right here today, is what I would expect. Remember back to the 4, 5, 1, 2, but that sets up the potential for a much bigger upside. This is actually probably a wave 4, and then we'll probably get a bigger wave 5. That wave 5 potential plays out. If this catches the move, we can see it up here between 89 and 100, and we have to jump back out. Remember what I said about grabbing the wave one and projecting it? That wave one, two, three, four. Let's just guess it holds right here. So that puts our wave five target somewhere in this vicinity right here. What would the climb speed be? Same kind of climb. What's that target out there? Sometime next year, March, April. So if you got into this with me and Jack and you got put, we could be in it a little while, but it may make a lot of money if you can ride it up here. Could it suffer a little bit more before we turn? Absolutely. Could it get up to like 126? Absolutely. Should you double down? I can't say if that's right for you and your account. So patience would be good on PL. This has probably got more to go. What happens after we get here? Probably a three-wave retrace right back in here before we set up the next move. All right. Blakester, I think we have some other income trades that I do daily to show everybody. If you're still here, checked out on
Sorry.
me.
No, my wife was taking off. I had to go say bye.
All right. It's really the little girl that you want to say bye to.
Yes. How'd you know? How'd you know? What's up? I missed. Are you ready?
Yeah, we might as well play my daily one percenter club trade where I just collect a little bit of scratch every day on money that I'm otherwise not using to do anything. It's really a trade that keeps me out of trouble.
There you
Um,
go.
that's where I started coming up with it. I was like, instead of doing some bullshit trades and just trying to guess where the market might go, what if I just put this money into a trade that said, you know what? I don't think the market's going to crash in the last 2 hours of the day, and it pays me about 1%. I equated it to what if you had to look at the street, put a blindfold on, and walk out and pick up a $20 bill. Would you do it? If your answer is no, I wouldn't do that for $20, then you probably shouldn't do this trade. If if you look around and look at the street and you're like, the street is pretty chill, I think I could walk out there with a blindfold on, pick up the $20 and be just fine. And that's, seems like a fair deal to you, then that's the kind of thing that this trade is.
So
Um, could you get hit by a car? Yeah, you could be in the hospital. You could get hurt. You could lose the money. But I tend to go after this trade every single day and just make a little bit of scratch. And I will share the details with you right here.
right now. So here we go.
Of course, got to start off with disclaimers. As always, there's always a risk of loss when trading. Past performance not necessarily indicative of future results. Now, from back in October of 25, a couple days ago, up through Friday, the 2nd here, on 176 live trades I took with real money, the win rate was 100% with an average return of 0.96% per trade, with an average hold time of less than 2 hours. Right around 2 hours, really. Now, I can't guarantee any specific future results. The next trade I do might be a loser. That's the way the market works. So if you need more information, you can see the terms and conditions on the prosperitypub.com homepage for more information. Terms of use down at the bottom. Now, let's be real. There's no black box miracle system that prints out winning trades. This trade does have risk. And the whole purpose of my research and work with traders just like you is to give you an edge in the markets. If you can't handle losers, if losers are just not in your cards, don't trade with real money. If you can paper trade, you can practice trading as much as you want until you get confident at this thing. Now, if you don't know me, I am Jeffrey Turnmeyer. I want to thank you for being here right here on July 5th with us. Today I'm on a mission. Unlike anything we've done before, it's a brand new nationwide initiative I'm calling Income Independence. And the goals are quite clear. I want to show 250 regular people, this is 250th birthday of America right here, from all walks of life, a step-by-step method to target extra income from the market every single day it's open. Now, before we dive in, I want to ask you a question right here. What do you think is a reasonable return to target? Get ready to answer in the chat from a given trade you take right here. Let me know in the chat right now. Type it in. Let me know. Would it be 50%? Would it be 25%? Would it be 10%? Let's see. Jono right here, he's saying like 8%. We've got Mike saying like 35%. Oh man. Yeah, we're seeing Mary over here wanting 200% per trade. That's I don't know that's realistic. That's a little crazy. Answers all over the place. Answers all over the place. So today I'm going to show you how to make 1% a day and how big of an impact that could be, just like it has been for me. And these numbers are absolutely crazy when you stack them up. And dozens of my closest followers are following right along with this trade. You see, it's all by tapping into a brand new type of trade, an income trade, that I like to call the 1% a day trade. I was able to take about a $35,000 account, 35 and change right there on the beginning of the year. This is January 1st, 2026. And after just 5 months of live trades, this became $82,000. Crazy year-to-date returns. To put that in perspective for you, that's nearly 2 times better than the best performing semiconductor ETF this year, and 18 times better than the S&P 500 performance this year. And here's the crazy part of this whole thing, as if that wasn't crazy. I did this with what might be the most straightforward approach out there in the markets. Just one trade a day, one ticker, and 1:30 p.m. every day. That's it. That's it. Now, this might sound too easy to be true, right? Too good to be true. The numbers are too big. In fact, the legal department kind of said that. But what makes the 1% a day trade so appealing, and in my opinion, so much better than virtually every other strategy out there, is the fact that it's not based on some random technical price pattern mumbo jumbo, doesn't rely on predicting anything. And it's not your typical directional approach where the goal is to chase those monster wins like the 200% in the chat right there. No, we're not trying to crush anything like that. We're not trying to guess anything really in the market. Instead, it takes advantage of a statistical anomaly. Maybe it's a statistical fact in the options market that has shown the power to give us extremely high probability of winning pretty much every single day the market's open. And it doesn't matter if the market closes higher, we can collect our 1%. It doesn't matter if the market closes lower. As long as we play it right, we can collect our 1%. And if the market's barely moving at all, that's the easy day right there. We make our 1%. As long as nothing crazy, and by crazy I mean like a black swan flash crash, big down move happens in the last little bit of the day, that 1% a day trade is optimized to win in virtually any market conditions. Which brings up the obvious question here. If the 1% a day trade has shown the power to win, even when the market's going up, going down, or just staying flat, can you even lose? And the answer is, of course. There is a substantial risk of loss every time you put money at risk in the market. Otherwise, you wouldn't get paid. You can lose that money. Absolutely. 100%. Now, 176 wins, 0 losers. I have a perfect 100% success rate on 176 live real money trades. To my knowledge, nobody in the industry has a better track record on live trades than this. So if you're ready to join me and my closest followers on this red hot win streak as we push it on higher, buckle up. Because in just a few minutes here today, I'm going to show you and invite you to join me live as I show you how to set up the next 1% a day right before your very eyes. giving anybody a chance who follows along that maybe you get in on the 177th winning trade in a row. Welcome to Income Independence, right here, July 5th, 2026. Now, maybe you don't know who I am. You see, I began playing the stock market game in the third grade, and as of this year, that's getting close to 40 years ago. I've been trading in the live markets with real money for 29 years now. Expert technical trader and option chain analyst. I took about $27,000 of my family's trading accounts, turned that into over 1.4 million in a few years, and I maintain a current 100% win rate, taking advantage of this 1% a day trade on 176 live trades in a row right now. So, welcome, everybody. Now, as a 29-year veteran of trading these markets, having made over $1 million from the markets, this right here might be my best, most unbreakable strategy yet. And I just want to be clear that this isn't some sort of crazy curve fit, back tested mumbo jumbo stuff here. I've been trading every one of these trades live that you're going to see here today. And unlike most methods out there, using this trade to target 1% a day might not be as difficult as you would think. See, it doesn't matter if you have a multi-million-dollar retirement account or possibly you just got a couple grand. Nearly anybody can learn this technique. All you really need, a brokerage account, internet, and a couple minutes a day right around 1:30 p.m. That says a.m. p.m. We're trading in the afternoon. For example, let's take a quick walk back to the beginning of the year so you can see exactly how this works right here. Let's say someone started with $10,000. That's the amount I'm going to be referring to with each trade here for the next few examples. Now, you can trade bigger, you can trade smaller. In fact, I do put a lot more money on the line every day, but let's just say 10,000, right? For the sake of being able to scale. Now, heading into February, it was not really an exciting time to be a trader this year. Us traders like to have a short-term memory, right? February, just kind of sideways chop. If we had Supreme Court ruling against tariffs. We had AI just like coming into doubts here. And then all this uncertainty left the markets just kind of chopping sideways in February for the entire month. It was kind of a tough tape. I mean, if you were counting on a bullish run after, you know, the events of last year, it was kind of tough. And then if you were counting on a breakdown and a big correction, well, didn't really happen in February. However, none of that really mattered to me. And if you traded along with me, it really shouldn't have mattered to you either. Because the 1% a day trade, it's all we had to do was place one trade, one ticker around 1:30 p.m. each day, no matter what the day was. And as long as everything went as planned, which it kind of does most days, the trade automatically closes out right at 4 p.m. For example, here's what happened the first week in February. Monday, February 2nd, 104. Tuesday, $100. Wednesday, 140. Remember, this is putting $10,000 at risk every day here. February 5th, 144. February 6th, 120. All in all, for the week, we're talking about $608. Not too shabby right there. Then again, the second week in February, right back to the well. Same trade, same thing. $80 profit there, $80 profit, $100, 120, $100. Another week, 5/5. I mean, that's a pretty good stack. You could have made another $480 with $10,000 risk on every trade. Do you have to risk 10,000? No. I risk substantially more most days. But we weren't done yet. Week 3, another $564 right there. Boom. 5 more winners. And of course, the last week of February, not really any different either. Another set of winners, $496 more total profit when you had $10,000 at risk on each of the trades. All in all, during the month of February, could have walked away with 20 back to back to back to back to back to back. You get the point. without having a single loser right there. That's about 2,000 in extra income just by pressing a couple buttons every day. And keep in mind, this was during a time when the S&P was just basically flat within a tight range. Can you imagine what kind of extra money that might have been and what it could have done for you and for other everyday Americans that took advantage of this? I mean, it's no secret that everybody's strapped for cash. I mean, it seems like no matter where you are in life, everything keeps getting more expensive. I mean, the price of virtually everything is higher, some things more than others. And that's why a record 70% of Americans are kind of feeling more financially stressed than ever before. I mean, think about this for just a moment here. 7 out of 10 people in your life, I mean, you may be one of the seven, are struggling to keep up financially right there. I mean, it's a tough break for most of America. Now, I personally know 3 people who have picked up work at Uber Eats or DoorDash just to make ends meet at the end of the day, at the end of the week. And that's on top of a regular, like 9 to 5 job. So they got a job and then they go spend their evenings delivering other people's food. That's a tough break. I mean, the reality is most Americans out there can barely afford to save money. I mean, look at this chart. We're pushing credit card balances to record highs. Seems like month after month. We're over $1 trillion for the first time in history of credit card debt. I mean, this is a scary problem that we're facing right here in America. In fact, more than half of Americans can't even cover $1,000 emergency expense if they've got it. That's crazy, right? You don't have $1,000 extra. Imagine going into debt just to save a furry friend. I mean, that would be a bummer right there. And possibly not even being able to buy a loved one a real gift that they might cherish for a lifetime. I mean, look, the last thing I want to do is witness millions of you or other Americans getting trapped in credit card debt. I mean, that's a downward spiral right there. And that's exactly why I'm here and why I'm excited about this income independence project right here. Because when you have a way to target about 1% a day, every day, reliably, consistently, I truly believe it could give people a little more breathing room during tough times where we have this inflation just crazy eating us alive. I mean, it's doing this for me and my family right here, and dozens of my top students. Kane, right here, 1% a day has changed my life. Patrick, 3,900 bucks right there with the 1% a day trade. Mary, walking away, doing what I love now. Hey, free time, right? She's got the cash, she's got the confidence. Bobby here made $7,000 in the last month. Robert, 56 days in a row without a single loser. This is life changing stuff. Ed, right here, walked away with 2 grand on the day. Took his year to date profit up to $91,000. He's doing better than I am. Now, if you're holding down a job right now, hey, don't quit. Don't quit. I'm not telling you to quit. And if you've been steadily saving up for retirement, you need to keep that up too. What I'm sharing here is a way to supplement income right here with just a little extra cash each and every day. In just a few minutes, I'm going to give you at home a chance to join me on what might be the 177th win right in a row, all by placing one simple trade on one ticker around 1:30 p.m. each day when there's an opportunity, like the very next month in March. Remember, the S&P had just come through a month-long chop fest in February, and then we got a brutal flush out in March. As a buy and hold investor, you probably didn't want to look at it. Your 401k down probably a nice little chunk there. In fact, pretty much every asset sold off in March. NASDAQ, big tech down 8%, Bitcoin slipping 4%. Even safe haven bonds were down double digits. Almost every investor probably losing money if you're a buy and hold, at least a few $100. But despite all that, anybody taking advantage of the 1% a day would have been faring much, much better here. And that's not because it hit once or twice, but every single trading day in March, we had a winner. Week 1, about $560 in profit. Week two, about $580 in profit. Week three, $612 in profit. Remember, this is $10,000 on every trade right here. We're not doing anything crazy, just taking an even $10,000, putting it on each trade. Week four, 690 in profit. And the final 2 days that weren't a full week in March, well, $222 in profit. All in all, during the month of March, that was 22 wins. Not a single loser. Zero losers right there. That would have been $2,574 in profit that you possibly could have made in just 1 month just by risking $10,000 on every trade. Hey, that's not bad. That's not bad. That's not a bad sandwich, as my friend Jack used to say. Now, this is a period where if you're a buy and hold investor, you probably might have been losing your shirt in March. And that's without a single loser on 176 live trades so far. If maybe you were a little more confident, maybe you put more money on the line, you'd be looking at like $5,000 from a single month. 5 grand. That's a better sandwich. More than enough to help offset the ever rising cost of living. Look, I mean, people aren't strapped for cash because they don't want to save money. Everybody knows how important it is to be beefing up the rainy day fund, right? I mean, nothing's going to protect you more than having cash in a problem. But now that everything's so freaking expensive these days, it's nearly impossible to put money. You need a penny jar just to try to rub two together and get a third. I mean, just the last few years, we've watched the average new car payment jump from about $400 to over $700 a month. That's nearly 300 increases. Yikes. How about food prices at the grocery store? I mean, we're seeing the largest increases since the 80s. And it's not just car payments and grocery bills. I mean, just about everything. Mortgage payments. If you have to move, those higher interest rates, oh, it's ugly. $1,600 up to $2,800 an average house out there. I mean, that's nearly that's almost a double on the monthly payment just for the same stupid house. I mean, imagine you moved out and then you had to move right back in. And the hard fact of the matter is, this is only the beginning. See, I believe prices potentially could skyrocket even higher in the coming months. I mean, look at this chart right here. The red line is the 1970s right here. That's the official measure of inflation in the 70s, when inflation ran hot for over a decade. We had the initial spike, we had a dip, we had a second wave that was even higher and lasted longer. Now, watch what happens when we overlay what's happening right now. From the 2020s, we had a big spike, it went a little higher, we're having a dip, it's almost the same. What do you think comes next? History kind of rhymes. It doesn't always repeat exactly, but if I was a betting on it, we're already starting to curl the bottom here on the recent CPIs and PCEs. So what do you think comes next? Um, it's not going to be good, probably. I mean, on the current path, there is a very real risk of an even bigger second wave of inflation hitting over the next few years, sending the cost of living even higher than what we've seen. I mean, I'm talking about the cost of living so high that we can't hardly fathom it right now. I mean, some economists suggesting that your household expenses could jump another $21,000 per year over the coming inflation cycle. And that's why I'm on a mission right now to bring and show about 250 people for America's 250th birthday how they could help offset these ever rising costs of living by targeting this 1% a day. All but placing a simple trade, just a simple single trade on one ticker right around 1:30 p.m. each day. And I feel like absolutely anybody could learn to use this technique. Now, it may not be right for you and your account, but I think just about anybody would be able to do this just about anywhere and at any time. You just got to know when it's set up and what we're trying to set up. As long as you have access to a regular brokerage account through a cell phone, tablet, or laptop, you can click a few buttons. You should be able to take advantage of this. I mean, that's all it really takes. Just like what came next in April. We went through February Chop Fest and walked away with about 2 grand with these 1% a day trades. I mean, this is risking $10,000 on every trade. We haven't done anything crazy here, just $10,000 every single day. Now, the March sell off, another 2,500 bucks. And then we had an April rally. Oh, that can't be good, right? Like different market condition. Well, it was another perfect month. Week 1, about 540 bucks. Week 2, about 520 bucks. Week 3, about 550 bucks. Week 4, another 690 bucks. Week 4 was pretty good. All in all, during the month of April, that's another 2,100 bucks in extra income. Just keeping $10,000, just the same stake on every trade. Now, for some of you, an extra 2,100 bucks in cash, hey, that solves a lot of problems, right? That could be significant. For others, maybe that's pocket change. Maybe that's barely enough money to take the kids and grandkids to McDonald's. But regardless of where you're standing in life, it might have been enough to move the needle in your day-to-day life. Maybe catch up on some bills, get rid of some of the debt, maybe boost the savings account just a little bit. That's a really smart thing to do. Or possibly just take a weekend getaway to somewhere beautiful like that right there in that picture. Oh man, that looks nice, doesn't it? Now, just to recap. So far today, we've seen 3 back-to-back months right here of trades. And when the S&P was choppy in February, it was 2 grand. When the S&P was flushing out in March, it was about 2,500 bucks. 2 grand again. When the S&P was ripping in April, another 2 grand. I mean, all in all, that's pretty good, right? Pretty good 3 months right there. And you could have entered each of these trades right around 1:30 p.m. like clockwork with me. And since they all worked out, each one would have paid right around 1% a day goal. That could have added an extra 6,798 bucks to the piggy bank after just 3 months. It's possible. Maybe you could have done it. Maybe you couldn't have done it. That's $10,000 flat risk on each trade. On an annualized basis, this is no different than, if we can carry this forward for a whole year, that's $27,000. That's pretty nice. How many of you got a $27,000 raise in the last year? Now, of course, with over 176 winners in a row and no loser on the books at all, you might be thinking, well, shoot, there's no risk here, right? I mean, can we lose? And the answer to that, of course you can lose. The market can come take our money. 100%. Nothing is guaranteed in the markets. And that's why I always tell students, never, ever invest more than you can afford to lose. Don't use money you need for rent. Don't use money you need for food. Don't use money you need for medical bills or any other bills. Do not use money that you have to count on. Don't do it. This is for extra money, and there's a substantial risk of loss anytime you put it in the market. My goal with this strategy is to limit losses. After all, I mean, who wants to place a losing trade, right? With that said, I designed this trade to be about as conservative as I possibly could get it. I mean, it's for traders who hate losing money and they want to reduce the risks as much as possible. And thanks to a simple risk cutting technique that I'm going to show you, I developed a strategy to be conservative. I don't like losing money, if you can't tell at this point. So I personally feel so comfortable with this trade that I like to reinvest my profits every day for exponential returns. And I roll it forward every single day. And I'll show you how to do this in just a minute. In fact, that plays a part in how I've been able to take roughly, $35,000 trading account all the way up to 82,000 in just 5 months. And it's taking those profits and rolling them into tomorrow's trade. You see that blip right there in that chart? You're like, oh man, you might be thinking that's a big loser day right there, right? No, that's not what that is. That was me taking a $7,000 withdrawal from my account and using that income I've been able to generate to do some fun things in life. I mean, I maybe mama needed a new pair of shoes. Um, that's something that a lot of traders don't ever get the chance to experience. Actually being able to withdraw profits and do something good in your life, right? Many of my top students have been able to do that. In fact, Ed, right there, $3,500 profit today, right there. Forever grateful. LDM, $43,000 since February. That's crazy. Vlad, 6 weeks straight. Keep it rolling. John, right here, he says he wished he had focused on this sooner because he could have replaced his salary. Still working. Good job, John. You'll get there. You'll get there. Andrew right here made over $100,000 with me since November. That's crazy money right there. You see, the secret behind this little income technique lies in taking advantage of a little known niche within the option market here. I know some people out there probably, oh, wait a minute, options, that's risky stuff, right? The answer is, yeah, options are risky, but only if you use them the way that most people do. Now, most people think buying options is the way to go, right? Buy risky options, buy them with little time left. And buying options is very risky. Can be definitely, you can lose substantial amounts of money. It's how spectators leverage large sums of money, hoping that a stock moves in the right direction over a certain period of time. The problem is that they don't always pay off when you buy them. In fact, a contributing writer for the Financial Post did a study and found that 95% of all option buyers, no matter even if you got the trade right in direction, 95% of all option buyers lose money at expiration. That's a tough break right there. I mean, that's odds are not in your favor. That means most investors who buy options are completely wasting their money buying those long calls or long puts, trying to bet on direction. A lot of traders don't realize that there's a different way to play the game. You see, options are a zero-sum game, meaning when there's an option buyer and they lose, there's an option seller who wins. For every win, there's a loss, and for every loss, there's a win. So, in an ideal world, if buying options loses 95% of the time, then it's a reasonable thing to do to assume that selling the options would win 95% of the time. And by using a little variation of the classic option selling strategy, I've been able to take this up to 100% success rate so far on 176 live trades. Essentially, I'm selling options to spectators. To make things simple, I tell my readers to think of it like Vegas right here. When you're buying options, you're kind of a gambler sitting there pulling the slot machine, hoping for that big win. But when you're selling options, you're kind of switching sides. You're going from the sucker, just kind of waiting to lose money, to becoming the house and collecting money from just about every transaction. And that's why we're able to target 1% every single day in a bull market or a bear market. Like the very next month right here, first week in May, $470. The week after that, second week of May, $500. Remember, this is risking $10,000 on each position, and the profits just keep rolling even into the third week of May. Another $550. And of course, the final week of May, not really any different. Another $500 right there. Another month, another 100% win rate. Beautiful, right? Another 2 grand in the bank. You starting to get the picture here? This is the most consistent thing I've ever done. Now, as good as the 100% win rate is, it doesn't guarantee that there won't be a loser. Then that very next trade that we do could be a loser, and that's why you should never risk more than you can afford to lose on any single trade. In my nearly 30 years of trading, though, I have not found a more reliable strategy. And honestly, I'm not sure you can get these type of steady returns anywhere else, doing anything else in the market. Let's say that maybe you took that 10K, put it into a high yield savings account from February to May, walked away with about $133. That's good, but I mean, it's not solving any financial problems, right? How about you took 10,000 bucks, buy and hold into the S&P 500? That's a little better, 900 bucks, 960 bucks. Now, had you rolled the profits forward into the 1% a day trade like I do? This is where it gets crazy. 1% a day trade profit $12,877. That's crazy. Great. But that's just taking $10,000 each day and putting it right in the trade and walking away with the 1%. And keep in mind, that's just after 4 months right there. You annualize this, we're looking at over $38,000 in the course of a year. And it's not like you need to be watching the markets like a hawk to get those kind of returns either. The whole point is to set the trade so it closes out automatically, which means less time in front of screens and more time doing stuff you love to do, no matter what it is. Believe me, in all my years of trading, I've never seen anything quite like this. And this has nothing to do with risky naked options or complex butterfly spreads or, I mean, the list could go on with these crazy trade names, right? Now, I'm going to show you in just a moment how targeting 1% a day isn't even any harder than shooting a layup. Although for me, shooting a layup is probably harder. It doesn't matter where you live or who you have a brokerage account with or how much experience you have in the markets. Anybody could start using this brand new method to target some extra income. You just have to place the trade right around 130 each and every day. I'm going to show you how to do everything. I'm going to give you everything you need to start using this groundbreaking income method. See, I have a live step-by-step workshop where I show you exactly how you can target these payouts with just a few clicks of the mouse. It includes the full details of how to place your first trade, how the 1% a day trade works, so you can target this technique right in your own account. Now, typically I'd run a class like this for at least $497 on its own, but today we're going to throw this in basically free. You can claim it free right there. See, once you get your hands on this step-by-step video, you'll be shocked at how clear-cut this is. You'll immediately be able to start using it tomorrow if you want to. And after hitting just a few buttons, you could have the trade locked and loaded. That's all there is really to it. Just like anyone would have seen here in June, the next month, I mean, hey, June just passed, right? Set the trade around 130 and week one profit, another $500, well, and change. And then the next week rolls around in June, 1:30 p.m., 1% a day, almost $600, $598. I mean, these type of opportunities are present in the market every day as we speak. If you want to see how straightforward these 1% a day trades are with your own eyes, we're going to have a live class this week. I'm going to show you how to place one of these trades. And today, you can claim access to this live workshop if that's what you want to do. So you can start implementing this in your own account just by subscribing to my most consistent daily income service, the One Percenters Club, right here. The One Percenters Club is the only service that I know of that targets 1% a day each and every day the market's open with an incredible 100% success rate on 176 live trades with real money. And we just keep counting. Many of my top students are making money virtually every single day in the markets. Like John here with $400 on 6 contracts. Gernot, another almost $1,200 right there for him just that day. My man Sledge crushes it right here, $2,500 on 3 spreads. My man Robinson, 3-day a week profits was $1,091. Nice. Doris here walked away with $480. Sally here, $544. James, $860. Mary, $800. Beautiful, Mary. Beautiful. And Mihail, $474 on 10 contracts. As I mentioned earlier, I'm aiming to bring about 250 new members on, whether you've been investing for years or maybe you just got started. Now, in just a moment, I'm going to reveal the ticker and the specifics of why 130. But here's how this is going to work. Every day around 130, I'm going to verify my data and post the 1% a day trade in the new members area. I'll post it in Discord too. You can sign up to have these sent to you via email, your cell phone, Telegram, all three, however you want to do it, whatever makes your life the easiest. Just like what would have happened the very next week in June, every day, right around 1:30, you would have immediately received an email or text with all the information. Now, you could have followed along, entering as soon as the alert hit your phone, spent the afternoon doing whatever you do, and sure enough, you could have walked away the following week and seen, look at that, another 618 bucks right there in June for the week. And the opportunities just keep rolling in. The next week right here in June, another 600 bucks. Sounds pretty good to me. Altogether, another 2,300 bucks in another flawless month of June. Money that, you know, could have been used for debt, maybe helping grandkids, maybe helping kids, maybe just planning another vacation. I mean, everybody wants a vacation, right? All great choices, but maybe the most important thing is not having to worry about how to get a little extra money all the time. And one of the beautiful things about this 1% a day trade is that we're able to set the trade so it automatically closes out for us. And that's a big, big benefit here because that means if you work during the day, like a lot of people that follow me, or simply don't want to be tied down staring at that chart every time, every little tick, every move higher, every move lower. The One Percenters Club has an automatic exit plan here. When you enter the trade, I'm going to teach you what the exit plan is so that you automatically close out. That way, you see how this could become a set it and forget it type experience with these daily income trades. Of course, alongside email alerts, you're going to also get instant access to the 24/7 trade room right here. It's one of my favorite perks. I love trading with friends, and it might be even better than making money. Well, I do like money a lot, so it's right up there with it. And I talk to people all the time in my trader chat room. I mean, it's can be a very busy place. There's no better feeling than celebrating big wins with your peers. Plus, I'll keep track of everything in our official trade tracker in the members portal. See the 100% win rate across 176 trades right there. Now, before I open the doors to the One Percenters Club, here's what really gets me excited about all these daily income trades right here. Take a moment to look at the entire track record of live trades here. This is a summary, of course. Now, you've already seen 1% a day has hit with a 100% success rate so far. I mean, whereas the losers, I haven't had one yet on 176 trades. Average hold around 2 hours. Average win has been 0.96%. I mean, there's your cold, hard numbers right there. Now, as you can imagine, consistent results like this, like these right here, have the power to stack up over time quite a bit. And I'm not just saying that because let's talk about it. Like the power of 1% compounding a day. I'm running just under 1%, so this is not even what I'm doing. But 1% compounded over 252 trading days is roughly 1,100% annualized return. That blows my mind right there. In the beginning, I didn't even think about it, and I ran it through one of the AIs, and I was like, what is 1% compounded per day with 250 something trading days? And it was like, oh, over 1,100%. I was like, wait, hold up. That's a crazy number. That's a crazy number. That's the power of compounding. It's like the eighth wonder of the world, right? Now, what you're seeing right on this graph here is compounding 1% a day over a full trading year. That's a nutso number right there. And it really picks up steam right after the point where I'm at right now, 176 days, right? We really start going vertical here. Now, a lot of people don't realize this, but if you're able to make 1% a day and you reinvest all that money into the next day, that could be 1,000% annualized rate of return. In other words, every $1,000 would be like $12,000 at the end of the year. A $10,000 starting stake would grow to more than $122,000. And that's just crazy numbers. I'm not sure anybody can actually do that, but I'm on pace for 1,000% return myself already. And that's with real time results right there. That's, I'm not far off, which is blowing my mind, quite honestly. And with potential like that, it shouldn't come as a surprise that my publisher set the price for this right here at right at 5,000 bucks for this One Percenters Club. In fact, if you try to sign up through the main website right now, if you try to shortcut and just get there right now, that's probably the price you're going to see. $5,000 for 1 year access to the One Percenters Club. But here's the deal. I'm going to do something fun. I mean, it's July 4th weekend, right? One of my favorite holidays. And let's shave the price way, way down. So, bonus round time, get ready. Don't leave away. Don't click away yet. Since this is a crazy goal, right? 1,127%. That's the goal. If we can hit that 1% compounded daily, I thought it was fitting to cut the price way down for everybody that joins, meaning you won't have to pay $5,000 that the publisher wants. $2,500? Forget that. Not even half of that. Let's price it at $1,127. What do you say for complete access? But I have to warn you, this special $1,127 offer is only guaranteed for the first 250 traders. One per year for America, right? 250 traders through the door right here. I want the ones who take action to have all the support they need to get going. If at any point my customer service team feels that we're getting a little too many members, we're going to shut this thing down. We'll cut the deal off. So if you're ready to join this One Percenters Club group for what could be the next great win, 177 in the row, well, click the link in the chat right here. One Percenters Club right here, 177th trade probably going out tomorrow. Lock in your deal. JeffreyTrader.com/1%, right there. ONEPERCENT. It's probably better just to click the link in the chat instead of mistyping. A lot of people tend to misspell my name if you type it in. Or you could call the team 904-706-3537. Have your credit card ready right there. Unlock the potential. Just click the link in the chat. Easiest thing to do right there. Just click that link in the chat. JeffreyTrader.com/1%, or call the team 904-706-3537 right there. So now the line may be busy and you may have to leave a message, but we'll get back to you as soon as we possibly can. And if you're just having trouble with any of those things, drop your name in the chat right there, your name and email, and we'll get somebody to get back to you just as soon as possible. And for a very limited time, I've set up an even sweeter deal here where you can get 2 years. You know, this is for 1 year right here. This price that we're talking about right here. This price for 1 year. If you want a second year, how about $370? That's not bad. That's nearly a 70% savings off your second year. You can access all the details once you click the link in the chat. And I want to remind you, I'm only promising that there are 250 spots available right here, right now. So you better jump on it. I want the new members to get onboarded, up and running, so that if we go over 250 members today, I'll have to chat with the team and see if we still have availability to keep everybody on board. We may have to shut this down. It's first come, first serve. So the next trade potentially going out on the next market open day. JeffreyTrader.com/1%. Call the team 904-706-3537. Unlock your access to this One Percenters Club right here today. Now, some of my traders have been making an absolute killing. Look at some of these stories right here. Like Mick, close to $20,000 since November. That's wild, right? I mean, look at that. We've only been doing this since October back here. You see it back there. Since November. John right here. Thanks for showing us the 1% a day. I mean, consistent and relatively lower risk right there. Robert here, making 5,641 last week with the 1% a day. Sledge right here. His goal used to be to make $100 a day. Now it's $1,000 a day. That's a pretty good. Hey, great job, Sledge. Ed right here, $5,000 this week. Actually, 5,200. Rounded down. Kay here, 1% a day. Changed her life. Speaking of which, you're probably wondering, all right, lifetime. Like, can I just buy a lifetime upgrade for pennies on the dollar? And the answer is yes. Once you secure that 1 year or 2 year membership right here, don't close the next page because we have a one-time special offer to upgrade for pennies on the dollar. No more renewal fees, no more maintenance fees, and legacy access where you make all the money you want. You can pass this on to a friend or family member, kid or grandkid for free. But I got to warn you, I'm not going to run this discounted lifetime price forever. So jump on it when you get the chance. The next trade goes out potentially tomorrow. JeffreyTrader.com/1%. Call my team 904-706-3537. Have your credit card ready. Be ready to lock in this amazing discount right here. And look, if you've been struggling in the stock market, I mean, maybe you feel like you're constantly taking one step forward, two steps back. We've all been there. It's not your fault. In fact, I was struggling before I started doing this. Look at this right here. Take a look at this. Look at my account. This is my account last year, starting July 1st, running into November right here. Uh, not most 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 gurus won't show you this kind of thing right here. This is when I was directional trading last year. I've been doing this for a long time, and last year I was getting chopped up. And this is one of my accounts and what it looked like before I started just consistently doing the 1% a day. As a directional trader, I would hit a few and then give it all back. I mean, that's the reality of trying to be directional. But on November 21st of last year, everything kind of changed right here. Right there, I hit a low point and I just started using the boring, same old trade on the same ticker day after day after day, just like we've been doing right here, just like we've been talking about. I went from spending a bunch of time trying to find those trades for nothing to show for it to generating a consistent income pretty much every single day the market's open. So I hope you can see how what gets this so excited for me right here. Why I'm so excited about the One Percenters Club. Because if I can make a big impact on my own life just by doing this one little trade every day on one ticker around 130, why the heck would I keep it to myself when I can help potentially thousands of other people do the same thing? So now the only question left, are you going to join the group? I mean, Jason K is taking action. Donald's taking action. Sally taking action. Robert's taking action. Nazim taking action. Gernot taking action. Ed taking action. Jody taking action. Sledge really taking action. James taking action. Today, I want to invite you to take action with us. Join us. Join our group. Click the link in the chat and join us for what could be the 177th win in a row. JeffreyTrader.com/1%. Call the team 904-706-3537 right here. Come join us. This One Percenters Club is available for you right now. Now, before I dive in the chat and answer a few of the questions out there, let's do a few FAQs, things I know that people are probably wondering. Like, all right, you went through a lot of trades at $10,000. Do I have to have $10,000? No. But the minimum is going to be about $2,000. You got to have at least $2,000 in your account ready to use in this trade that you can afford to lose because the next trade might not work out. That's the cold, hard truth. Now, what's the ticker? That ticker is SPX. This ticker tracks the S&P 500. The options are very, very liquid. We can get in easily. We can get out easily. But that's not the best part. You can save a boatload on taxes with this too. Now, some of you are like, well, what about SPY? What about XSP? What about, I can already visualize it in the chat. The ticker is SPX. And if you join me, I'll explain why, not anything else. Can I trade it in IRA or 401k? Yes. Any regular brokerage account does the trick. What if I traded options before? Or what if I haven't traded options before? If you have or if you haven't, or maybe you're not so sure, we included options training video series. That way you can get up to speed. Plus, we have the 24/7 chat room where you can ask all your questions. I'm almost always available to help, and I have a lot of very, very, very experienced traders in the chat that will do their best to put you on the right path too. It's a team effort here. We're not competing. We're all on the same team. How much time do you need? Well, you're going to have to spend a little bit of time to digest the trade. But after that, many times you can get in the trade in less than a minute. Practically set it and forget it because it automatically closes out. Now, why do I enter the trade at 1:30? You might be wondering, why 1:30 p.m.? Well, the answer is we're targeting the moment in the day where zero-day options start getting the fastest time decay towards zero. They really start to pick up time in that last little bit of the day. Now, you imagine this curve right here, right? This is, we're talking 90 days all the way down to zero. Well, this same curve applies just on the last day. And somewhere right around 1:30 is where this thing really starts diving off, right there. Is there any sort of guarantee? And yes. Now, this is a premium offering right here, and it requires a ton of work on my end with my, my customer service and, all the things. So I'm going to offer you a 14-day money back guarantee. You can kick the tires for 2 weeks, and if you're not thrilled, cancel. Get every penny back on your membership. But my goal is to try to get you there as fast as possible with these trades. And I'm not going to guarantee you can cover the membership in 2 weeks unless you have a very sizable account. Customer Support Live, I have a group of awesome dudes who are live every single day. And I'm going to give you a free pass to our daily Customer Support Live, where top members of my support team are there live from 10 a.m. to 1 p.m. every single day to answer your questions. That's available at prosperitypub.com/help every single market open day, 10 to 1, right? 10 a.m., 1 p.m. Go there. My man Cam, my man Gustavo, they are up on this trade. They can help you take an alert and get it placed, explain all the details. No matter what broker you use, it doesn't matter. How long do you think I can keep this win streak? Might be another thing you're asking. Now, I can't make promises, right? The next one might be the loser. The next one might take me down, but it wouldn't surprise me if I hit 500 wins in a row. I have some rules in place to try to make this even better. And when you join, I'll get all the rules to you in a nice little easy PDF. Tells you what to do, when to do it, why to do it, how to do it. I mean, it's probably the most unbreakable strategy I've ever used. If you want in on what might be the next big winner, the 177th win in a row, you know where to go. Right here. Trade goes out tomorrow, potentially. JeffreyTrader.com/1%, 904-706-3537. I can't guarantee, anything crazy could happen. They could shut down the market early and we couldn't, not get a trade. So that's why I say it potentially goes out tomorrow. You never know. On a given regular market day, 1:30 p.m., that's about the time to expect the trade alert right there. All right, we can grab some chat questions right now. Looks like Bob's asking, what brokerage account do you need? And honestly, any broker that allows you to trade 0-day options. That's what we're doing. 0-day options on the S&P 500. That's what it is. What's the ticker? I see the next question. S&P 500. SPX. That's the ticker. Another question, how much money do you need? As we did in the FAQs, you're going to need at least $2,000 minimum. And if you got $2,000 and that's the size of your account, you're going to have, you're probably not going to be able to do that compounding thing. It's probably going to take a little bit bigger account to do the compounding thing. Just honest, straight, what's the win rate? 100% win rate. Another question I see, what's the average return? 0.96%. It's all down here at the bottom in the fine print here. I've done trades, 176 of these trades live since October of last year through Friday of last week. And I've won every trade that I've done. Returned about 0.96% right there. And it's basically the last 2.5 hours of the day right there. How do you close them out? Honestly, I let them expire most days. Just expire. I don't pay the extra commission to close them out. Can I use SPY? I see that in the chat. No, you can't use SPY. Can you use XSP? No, you can't use XSP. There's not enough credit there. Even though they're liquid, even though you can get in and out, there's not enough credit where we need to play. All right. Any other questions? When's the next trade alert? Hopefully tomorrow, if everything is going good in the market. If we're having a big crash, I do avoid big crash days, big down days. If there's some sort of other chaos going on, we'll avoid the trade. All right. Let's see. Any other questions? Make sure you call in customer service 904-706-3537 if you have other accounts you want to maybe swap something. Any other kind of payment plan, call the team. Otherwise, just go click the link in the chat right there. JeffreyTrader.com/1%. Come join us. That's how many spots available? There were 250. I've already seen a bunch of transactions go through. So don't miss out. Don't miss out. We're getting started right away. All right, everybody. Thanks for being here on this July 5th holiday with me.
Sorry, guys. Market Navigator popped up. I don't like it when those end so
What?
abruptly like that. Do you guys have any questions for me at all that I can answer before we call it a weekend and get on out of here? Going once, going twice, three times. Nope. Okay. All right, guys. Thank you so much for being here today on Market Masters. Really means a lot. I know you guys love it. Me and Jeffrey have a good time doing it. So we'll see you guys on Monday. We'll be live at 11:30 a.m. for Market Masters right here in this room. So take care, folks. I'm going to leave the room open just a little while longer. There's not going to be any music, unfortunately, because my other computer is playing the tunes. So just a couple minutes if you want to like post your email in the chat for a replay. That's cool. But you guys have a good one. We'll see you on the next one.